We're testing out this strategy of selling cash secured puts with a delta of 0.3 on SPY. And if we get assigned, we're going to do selling covered calls with a delta of 0.3. January of 2021 is where we're starting. So we have some room to play around a little bit. And because of how horrible thinkorswim is when it comes to tracking trades, I have an Excel spreadsheet where I'm going to be logging all the trades we do just to keep track of how our profit's going throughout this process. I don't want to do both on the same day just in case the market, makes a huge swing. So what I want to do, probably wait a few days. So we'll go to January 7th, see what the market conditions are now, and put our second put out there. This is going to be close to our option expiration also. Okay, the market swung wildly. This is good. This is good. So what I want to do is look around 2021. So we'll go look at this one, see what's going on. Find something around 0.3 delta. Looks like we got to go a little further out. Okay. The 370 strike. We'll record that in Excel. And especially when you're doing puts, it feels super profitable at first, but with these kind of strategies, it doesn't stay that way very long. Like if the market swings fast, we could be assigned these and then the price just tanks. So that's why I kind of stagger the day I purchase both of them. Okay, so the first put expired out of the money, so we're clear on that. So let's go to the next available trading day to get another put. Okay, so right around 0.3, we've got this one. Lock it in, send it. See, we'll document this. $4.64 is what we made. Looks good so far. I got to manually change the scenes and stuff on here, so bear with me. One thing we could do at this point is take our profit from this other put we have. It's not exactly 50% yet. I'm trying to simulate how I would actually do it. I'm not going to look at the market every day when I trade. So when I do the wheel, I like to not sell too many contracts, on the same day, just to kind of give the market time to balance out. And in this case, it looks like it's probably a good idea to close this put so that we could write a new one today. So that's what I'll do. I think we got it at 62. So I'll document that. And I put that on the debt because we had to pay 62, close it out, and then it goes 62.67 is what we actually paid, because using TV Ameritrade, they have like a fee you pay, which is 67 cents per contract. I just like to include that in my calculations. All right, so we're back on here. We've got one put out there, and we can write brand new put further out. So what do we have? This one's 25 days, so we can look around 14 probably. See what's going on. 0.3 we can do right here. Let me copy this down. We'll add it to our Excel spreadsheet. So far, we're doing pretty well, but that's expected when you're still on the put side of things. It gets a little dicey when you spend a lot of time writing calls. A lot of times when I'm running the wheel, I end up stuck on the call side just because I'm unwilling to take a loss. So this is a good exercise to just practice. Let's get into February now. So February 5th is when one expires. So let's take a look at February 6th. We'll see if we expired in the money or not. We landed outside the money, so we got to keep all the premium we did for that one. Perfect. Still looking super profitable now. Let's look at the next trading day so we can determine. Pick one around 21. Let's look for 0.3. We'll do this one right here, 357. Copy the details. We'll add it to our Excel spreadsheet. 359. Okay, looking profitable so far. Yeah, we could close this put out early and make a ton of money. I'd probably do that if I was trading, just because it's like 4 days left and we've nearly got like 100% of the profit. Wouldn't want to risk, the market rapidly changing on me over the weekend or something. I'd probably do that. So let me close the order. $0.04. Wow. So we'll log that. Wow, that was a stroke of luck right there. Usually you don't get that. Okay, the market's still open. We've got a 17-day. Let's look at a 21.3 right here. We'll log this. 3.47. Since I'm doing paper trading and simulating it, I'm not too focused on the premium I get. Like I'm not trying to maximize or do anything. I'm just doing, whatever it assigns at the moment. Because I feel like in real life you could min-max it a little bit and that could adjust your margins. But since we're just trying to back test here, this is it's best not to try to do that, especially since these aren't real people on the other end. It's just going to do, whatever the mid price is. So like if we did 3, 4, 6, it would sell immediately because it's mid price. It doesn't know what the actual order flows were at the time. Okay, let's jump ahead another week. It looks like both of these are March. So we could probably jump ahead to 26. This one that expires in 3 days looks like it changed quite a bit. Like we can pull, $190 of profit out of there. And the other one we can't sell. So that's what I'll do. I'll sell this one early because I don't want to have two of them end in the money. They're pretty close together. So we'll buy that at 170. We're closing one of our puts. At 170. Switch back here. Let's take a look. Let's get something a little further out. We'll do 21 days. Gotta pop it up to maybe 28 lines. Yeah, here we go. We'll log that. I'm very big. I'm making sure I log all these just because it's helpful for analyzing later. You gotta know how you trade. so that you can improve. Switch back to the thinkorswim application. In 7 days, this put expires, so March 5th to Saturday. See how it does. I'm not sure if it loaded or not. It looks like it expired out of the money though, which is good. That's a big deal. That's a big deal. Okay, so we can write another put. We'll do it at 21 days. Trying to be a little consistent. We'll do it at this 0.27. Document that now. 408. Pretty nice premium. March 19th is when it gets executed. So let's check what Friday's looking like. We might want to sell before the weekend. Absolutely. In this case, I would sell the put. This one right here looks like we got more than 50%. So I would want to sell that. Let's sell it. 47 we bought it at. Log that. Go back over to thinkorswim. Analyze this one. This got 17 days left. We've made 50% already. So I'd want to close that one also. $167 it executed at. So we'll write that down. Go back to thinkorswim. And today, I'm only going to do one. We'll do April 1st. Look for a 0.3. Sell it. I don't like writing multiple puts on the same day, especially on the same symbol. Switch over to Excel. We'll log this. You may see me like copying like the whole row in thinkorswim, and I just do that, in case I want to parse this later with some other software. Like I'll know exactly what the trade was looking like at the time in thinkorswim. It's just something I do. Okay, we'll go back to thinkorswim now. We got our put in 20 days, so let's advance time by 1 week. It's already made about $100, but I'm not gonna close that out. We got another put we can write over here. Okay, let's advance another 7 days. I usually advance 7 days at a time because when I'm really trading, I only trade 1 day a week, and it's most of the time on Friday. It may seem strange to some people, but I just like trading on Fridays. So this one right here, I'm going to close out early. Got a week left, but we've squeezed almost 90% of the value. I usually like to take profit when it's 50% when I'm doing the wheel, just because I know I can, write another contract and get even more. So we close at 0.74, and this is in the debts because we have to pay money to close out the contract. I forgot to change the scene. That didn't show up. Okay. This one's kind of on the fence. I'm gonna analyze this next week in this trade, but we'll write another one at 21 days. We'll do it right here. Forgot to change the scene when I wrote the cash secured put close. But we logged that one right there. So far, this strategy has been pretty profitable, and we're making our way through the year. This is assuming you only have $100,000. At this point, we still can't do three contracts at the same time. Okay, we're in April now. Let's see what we can do. We got a Monday. Normally I wouldn't trade on a Monday, so I'm going to just advance it to like the Friday 9th. In this case, let's assume I just didn't trade this week. So this is Saturday. We'll find out if it ended in the money or not. Definitely out of the money. Definitely out of the money. this other one looks like it's also going to end up out of the money too. So we'll go to the 12th. I'm shocked. We haven't gotten assigned any yet. Usually when I simulate a wheel like this, I'll get assigned pretty quickly. Let's log this new put we got. So on the 17th, the other one should be fully closed out or assigned. So let's see what happens. Yep. So it ended out of the money. That's good. Now we can move to the 23rd of April. We can write another cash secured put, determine if we need to write buy to close for the other put we have out here. So first we'll do this. Document that trade. This one looks like it's worthwhile to close it out too. So we'll buy to close. Whatever price at 59. Okay. I forgot to switch it from Excel. Like I'm manually changing the scenes here. I'm sorry about that. But I'll show you what I just did. In Excel, or thinkorswim, click this one and we did a buy to close on it. That's the one we got for 59. And we also bought this other put down here for 320. So we'll advance another week. There's a reason why I have to do all of this in Excel instead of using thinkorswim on this virtual account. It's because all these puts that we went through before in the virtual platform they have for thinkorswim, it doesn't handle option assignment well. So when they go expire, it doesn't automatically assign the stock to your account. It doesn't close out the option if it expired out of the money. So it doesn't handle assignment like it normally would. There's like a process they have, kind of works in the background that we're just not eligible to have apply to our virtual trading. And it's kind of frustrating. It takes away a lot of the value because I want to practice some of the more advanced strategies in here, but I have to use like an Excel spreadsheet also to log all my trades and then like clear them out. Looks like we're not gonna buy this one back though. Profitable enough yet. It may get assigned though if we leave it, but I think that's helpful to see. So we'll sell another 21 days out though. We'll log this. Switch the scene this time. Switch it back. We'll advance 7 days. Okay, both of them look super profitable. So what I'll do, I'm going to buy to close on both of them. Close order, buy one. 63. We'll log that. Buy to close this one also. 160. I think this is actually a good stopping point. Probably continue this in another video, but it's been kind of going on for a while in real time. I'm going to stop here and we'll pick it up, continue out maybe a year or so. Let me know your thoughts on this in the comments. So leave some comments. Let me know what you think of this strategy. So we're just to recap it, we're testing out this strategy of selling cash secured puts with a delta of 0.3 on SPY. And if we get assigned, we're going to do selling covered calls with a delta of 0.3, and we'll see how that goes. So far, though, cash secured puts we've been doing, none of them have ended in the money, so we haven't been assigned any. We're just on the put side, which is why the strategy seems very profitable. 5 months into the strategy, we've made about $4,000, maybe even 4 months, because we're at the beginning of May. That's a pretty acceptable number for only having $100,000 in your account. I feel like we're on the edge of being able to use 3 shares or 3 contracts at a time. And once that happens, it just kind of snowballs a little bit more. Let me know your thoughts in the comments.